Did you realize that unpaid taxes of billions of dollars occur annually? Even more unexpected is the fact that the richest people and businesses are primarily responsible for this unpaid tax. We're going to learn the truth today about the effects of the wealthy's tax evasion on our society. By utilizing offshore accounts or tax law loopholes, for example, tax avoidance is a legal strategy that enables people and companies to reduce their tax obligations. Tax avoidance raises ethical and moral concerns since it operates in a murky area, whereas tax evasion is prohibited. It might be difficult to distinguish between tax avoidance and tax evasion. Tax avoidance employs legal strategies to reduce tax payments, whereas tax evasion entails overtly unlawful acts to avoid paying taxes. Aggressive tax avoidance's ethical ramifications, however, are hotly contested. We'll learn more about the strategies wealthy people employ to evade paying taxes as we investigate this topic in greater detail and consider its wider social ramifications. Come along as we reveal the truth about the wealthy's tax evasion strategies and the implications for all of us. Subscribe to our channel for expert tips, practical advice, and money-saving strategies that will help you achieve your financial goals and live the life you've always dreamed of. It is important to distinguish between tax evasion and tax avoidance in order to comprehend how the wealthy evade paying taxes. Underreporting income or exaggerating deductions are examples of criminal actions taken with the goal to avoid paying taxes. Conversely, tax avoidance refers to the utilization of legal tactics to reduce tax obligations while adhering to legal guidelines. Despite being lawful, tax evasion frequently sparks ethical questions because of its intricacy and abuse potential. Because tax regulations are complex and ever-changing, there are always ways for people and businesses to take advantage of loopholes and lower their tax obligations. These tax breaks can include credits, exemptions, and deductions that, when applied carefully, can drastically reduce one's overall tax liability. The issue of tax avoidance is further complicated by the use of offshore accounts and intricate financial arrangements. It can be difficult to manage the maze of rules and regulations that makes up the tax code. Astute taxpayers, particularly those with substantial financial resources, might use a variety of legal techniques to reduce their tax liabilities. These tactics could include complex business structures that take advantage of tax jurisdictional disparities, complex financial instruments, and foreign activities. Now that we know the difference between tax avoidance and tax evasion, let's look at some strategies the wealthy employ to reduce their tax obligations. These strategies frequently make use of complex financial strategies and tax code loopholes. Using offshore accounts is one popular strategy employed by the wealthy to lessen their tax liability. Individuals and corporations can avoid paying domestic taxes on their income by maintaining assets in foreign countries with advantageous tax regulations. In addition to possible tax advantages, these offshore accounts offer a degree of financial anonymity not found in many domestic banking institutions. When it comes to tax planning, offshore accounts may be a very useful tool for both individuals and corporations to lawfully reduce their tax liabilities. Taxpayers can intentionally decrease or postpone their tax obligations by locating assets in jurisdictions with minimal or no taxation. The use of offshore accounts has generated debate, though, with some contending that it encourages tax evasion and jeopardizes the integrity of the tax code. Rich people and companies use a variety of other tactics in addition to offshore accounts to reduce their tax obligations. These could include managing their tax risk through the use of sophisticated financial products like futures and options, maximizing the tax benefits from the way their firms are structured, and exploiting tax credits. The wealthy's pervasive practice of evading taxes has significant effects on society at large. Large amounts of money that are not taxed have a huge influence on government revenue, which in turn affects the funding of infrastructure and other necessary public services. Transportation, healthcare, and education are just a few of the public services that greatly depend on government funding, which is provided by tax dollars. The cost of maintaining these services frequently falls disproportionately on middle-class and lower-class individuals and families in the form of increased taxes or fewer services when the wealthy avoid paying their fair share of taxes. Widespread tax evasion can reduce tax revenue, which can negatively impact public service accessibility and quality. This can impede the development of infrastructure, which is essential for economic progress, and result in discrepancies in access to healthcare and education. In the end, it may make inequality worse and impede a social mobility. Aside from the effects on public services, wealthy people's tax evasion can have an overall negative influence on the economy. Less money may be available for investments in R&D, infrastructure projects, and social welfare initiatives that promote economic growth and tackle societal issues if government revenue is lower. As we think about these consequences, it becomes evident that tax dodging is a problem that affects society as a whole and extends beyond individual acts. There has been much discussion in the public sphere over the moral and ethical ramifications of wealthy people's tax dodging. Tax avoidance is perceived as a type of social injustice that worsens inequality by some, while others consider it as a legal way to minimize tax liabilities. The way the public views tax avoidance is frequently influenced by political discourse and media coverage. The controversy surrounding the problem has been fueled by high-profile incidents of people or corporations utilizing complex tax methods to lower their tax obligations. These cases have received significant attention and condemnation. Political ideologies, economic situations, and social values all play a complicated interplay in shaping the public's image of tax avoidance. Some perceive tax evasion as a smart financial move, but others, especially in the context of rising economic inequality, see it as a betrayal of civic duty. The fairness and integrity of the tax system are fundamentally called into question by the controversies surrounding tax evasion. While some say that tax planning is a valid technique necessary for economic progress and success, others counter that the existing system permits the wealthy to take advantage of loopholes and unfairly profit from tax benefits. It is evident as we work through these many points of view that there is a close connection between the problem of tax avoidance and larger cultural norms and values. As we get to the end of our investigation into the reality of how the wealthy evade taxes, it is evident that this is a complicated problem with many facets and significant social ramifications. Even if tax avoidance is lawful, it raises moral concerns about the equality and fairness of our tax system, as we have seen. Beyond the activities of a single person, tax avoidance has an impact on public services, government income, and the overall economy. Additionally, it modifies public opinion and ignites discussions regarding how taxes influence our society. It's crucial for us to remain informed as citizens and to assess the laws and procedures that control our tax system critically. By comprehending the intricacies of tax evasion and its consequences, we can participate in knowledgeable dialogues and promote just and equal tax